Welcome everyone. This is Dr. Salam here, and today we are going to be starting this FOREX course, and it's my personal course, and I call it FOREX for beginners. So if you are someone that has like that, if you have knowledge about FOREX already, I don't think this is going to be for you. But if you are someone that's just wondering how to start FOREX and you don't know where to start from, if you come across this video, kindly put the notification and subscribe to my channel because I'm going to be doing this course just for you. This course is just for the beginners and it's titled FOREX for the beginners. So without wasting much of your time, let's get into it. So we'll start from candlestick formation. Candlestick formation. So we have two type of candlestick. We have the bearish candle. This candlestick represents the selling momentum in the market. It's the candlestick that identifies, that tells you like, okay, we are selling. It's the red candlestick, or you can use whatever color you want. And we have the second candlestick, which is the bullish candlestick, and this candlestick represents the buying momentum in the market. So those are the two types of candlestick we have. We have the buying candlestick and we have the selling candlestick. So let me show you what the buying and the selling candlestick looks like. Story. Every candlestick have its own story, and there are four things you need to be looking at. There's four things you need to be able to identify for you to successfully identify what a candlestick is. And number one is the opening price of a candlestick, the closing price of a candlestick, and the highest price of that candlestick and the lowest price of that candlestick. That's the story behind every candle. For a candle to be considered a candlestick, it needs to have an opening, a close, the high, and the low. Not every candle have all this, but every candle have the opening price and the closing price. At least there are some candles that will just have the opening and the closing, but they are very, very, very rare candle. So the first thing you should know that you would be looking for four parts on the candle: the opening price, the closing price, the highest that price got to, and the lowest that candle got to. So that is the four main components of a candlestick. So let me show you selling candle. The selling candle, the opening price needs to be above the closing price. So whenever you see a candle open, if it's going to be a selling candle, the closing price of that candle needs to be below the open of that candle. So let me show you the example of what I'm talking about. This is the bearish candle, and you can also call it the selling candle. So it consists of four parts. As every candle, you have the opening price right here. We have the high. Okay, we have the opening price. We have the high that the price got to. We have the low that the price got to, and we have the closing price right here, which is another example of what a bearish candle looks like. This is another example of a bearish candle, of a bearish opening. So we have this right here. This is the opening right here. This is the open range right here. This is the highest it got to. This is the lowest, and this is the close of this candle right here. Let me put that in text. So this candle, you see because this is the bearish candle, this right here, this is the opening price of the candle. This is the lowest it got. This is the closing price, and this is the highest price. So which meaning the candle opened, created the high, went low, created the low, and closed. So that's the bearish candle. Let me put it in the perspective of the real candle. You see, this is the bearish candle. We created the highest price. This is an example of a bearish candle. This is the perfect example of a bearish candle. So as you can see, the bearish candle, the opening price must be above the closing price. So we opened right here, created the highest price. This is where the price got to, and we start selling down. This is the lowest, and we closed below this place. So this is the bearish candle, and this is how to identify a proper bearish candle. So let's move to the bullish candle. So this is the bullish candle, which represents the buying momentum. So on the bullish candle, the closing price must be above the opening price of the bullish candle for it to be a perfect bullish candle. So I'll show you the example of what the bullish candle is. Let's dive into it. This is what a bullish candle looks like. It's open here. This is the lowest it got to, and this is the highest it got to, and this was the closing price of a bullish candle. So it's just like a buy candle. When you are buying, we are going up, and we are selling, we are going down. So you open, we come down, then we buy up to this high. We opened right here, we come down to create the low of the candle, and we start buying from this low to this high. So this is the highest price point the bullish candle got to, and we closed here. So for the bullish candle, the opening price needs to be below the closing price, which means like if you buy low, you will sell high, so you close high. So that's what the bullish candle is for. So that's it for candlestick formation. And this video we are going to be doing is how to identify a trend, and what we mean by an area of support and resistance. You know, how to identify a trend, how to identify imbalances, and how to identify area of support and resistance, which you can call order block or breaker block. So that is what the next video is going to be about. But now this is the candlestick formation. You know what you need to identify a proper candlestick formation. So thank you for watching. If you